or the Nasdaq when it burst, it didn't have an impact on, say, the copper industry to a meaningful extent, and so forth. So the bigger the bubble, and the more the bubble includes different asset classes. Obviously, when that happens, when the bubble bursts, then it's bad. Then it's very bad.
So would you say economists were saying that it will take a year for the global economy to get back on its feet? That's wishful.
Well, what is the definition to get back on its feet? You know, I think there are two scenarios going forward. A recession is unavoidable, and I travel extensively. I can tell you, in my book, the recession began in the United States last October. Now, statistically, maybe not, because, you know, with statistics you can do all kinds of things. But let's say in reality it began a year ago, and now August, September. What happened since last October, the economy was basically in a recession. But because of credit pumping that the Fed attempted, and I think they've done things, matters even worse, like slashing interest rates from 5.25% to 2%. The economy didn't go down dramatically. It was just no longer growing, and you also have to see an economy consists of thousands of different sectors, from the pharmaceutical sector to the retail sector to production to railroads to transportation, financial services, and so on. So you could have in an economy, say, 20 sectors in a recession and maybe 5 sectors still expanding. That is a possibility, but overall it would still be a recession. But in any event, I think we went into recession in the US a year ago, and the rest of the world, for the last 6 months that I've been traveling, I can tell you, I haven't met anyone who said that business is better than a year ago. With the exception of a taxi driver in San Francisco, he told me the business is very good because a lot of tourists are coming to San Francisco from overseas. Because obviously the low dollar meant that quite a few people would take advantage, especially from Europe, to travel to San Francisco. But in general, every businessman I've talked to, every kind of person in the service industry, business is down vis-a-vis a year ago. So we are in recession already. And I think it will get worse, and it could become quite bad. You know. Like, so far, actually, I would say, the worst recession I saw in the world was 1973-74. I mean, people really had the feeling the world would come to an end. And then the 81-82 recession was not that bad, but it was quite bad, but not that bad. And then since then, we haven't had really a bad recession. We had a terrible recession in Asia, the Asian crisis. That was, I mean, a huge setback. That was a big setback. And I think we could have in Asia a setback, not to the extent we had it in the Asian crisis in 97, 98, because at that time everything collapsed, the currencies collapsed, the stocks collapsed, properties collapsed, businesses collapsed, and so forth. Asia is in a financially much stronger position today than they were at that time. But we could nevertheless have a period of, say, very low growth, and some businesses going out of business, and unemployment going up.
Yeah.
So my view is the global economy for a few years will not have strong growth.
What is that? And that would be what? 1%, 2%?
Well, we could contract now into 2009 and then stabilize and then kind of move sideways and then start to recover. I don't know exactly when. And we also have to take into account geopolitical conditions that may lead to some problems in the world, and there are a lot of unforeseen or unpredictable factors that could have an impact. In general, and we are here not to, let's say, predict precisely economic outcomes, we're here to make money. So the question is really, when will stock markets bottom out and when will the next bull market emerge? My feeling is that stock markets made a major high, by and large, between 2000 and 2007, and that it will be very difficult for stocks, in real terms, inflation adjusted, to exceed the peak of 2007. Now, if worldwide central banks print money like crazy, it's possible that they bring about high inflationary periods. And then in high inflationary periods, everything goes up, from the price of this carpet to the price of this chair, and stocks. But obviously stocks would then underperform, say, gold or hard assets, in my opinion.
Yeah. Which brings me to, I've read some comments from economists and investors saying that the central banks worldwide need to engineer calibrated rate cuts to arrest this slowdown. I mean, is that really needed? I mean, wouldn't that lead to another bubble, as you've been saying?
But I'm not sure that the rate cuts will help a lot. They may cushion somewhat the decline, but make matters worse. Because look, if I go back again to September 2007, under Mr. Bernanke, the Fed begins to slash interest rates. Mm-hmm. And what did Wall Street and the banking system do? They increased their leverage. When they should have started to deleverage already, say, in 2006 or 2007, and not increase the leverage. So actually, through artificially low interest rates, they prevented the financial sector to immediately deleverage, and that's why the problems today may be actually worse than had the Fed not cut interest rates in 2007. Also, I'd like to mention that in September 2007, the price of oil was at $75, and the CRB index was lower than it had been in May 2006, because the CRB and the oil had peaked out between May 2006 and June 2006. And then it had been going down essentially and moved sideways for a year. Then comes Mr. Bernanke and slashes interest rates. What does he produce? Another bubble. This time oil went from $75 to $150, and other commodities and the CRB also went up by more than 30%. And now recently this has also been deflating, adding stress to the system, because people in the commodities market are of course also leveraged. And when commodity prices collapse, they have to put up more margin or sell the commodities. When the commodity prices go down, they impair other market players that then also have to sell assets. So actually, I would say the slashing of interest rates may not help very much.
Not help the global economy?
I don't think it will help very much.
Uh-huh.
Actually, if I have one medicine for the whole basis, why do actually people speculate? Why would I go and speculate? The only reason I speculate is if I deposit my money in the bank and the interest I get from the bank is below the rate of inflation, then I'm obviously not happy to have a deposit in the bank. So then I look for opportunities elsewhere. I buy commodities or I speculate in stocks or whatnot. But had central banks around the world kept interest rates at a level that is encouraging savings, we wouldn't have the problems today. Believe me.